Hello students, in final accounts, we learn the effects of some adjustments today. Now for your question, you will be given a trial balance and some adjustments. You have to present your answer by preparing the trading account and then profit and loss account and balance sheet. Each and every account balance given in this trial balance will have just one effect. The debit balances will carry debit effect and the credit balances will carry credit effect. And for the adjustment, we have to give two effects, one debit effect and one credit effect. As you know, the left hand side of trading account is a debit side and the right hand side is a credit. Same in the case of profit and loss account. But in case of balance sheet, the debit effect will be shown on the asset side and the credit effect on the liability side. Now we see the effects of some adjustments. Closing stock. Stock of goods lying unsold at the end of the year is a closing stock. The value of closing stock will be given in adjustment. So we have to give two effects for this. For example, closing stock is valued at rupees 60,000. Now the debit effect for the closing stock will be on the asset side of balance sheet. We write closing stock 60,000 here, and the credit effect on the credit side of trading account. We write by closing stock rupees 60,000. So here these are the two effects for the amount of closing stock. Depreciation on asset. Depreciation is a reduction in the value of asset due to its use, wear and tear. The percentage of depreciation will be given in the adjustment. We have to calculate the amount of depreciation on that particular asset and give effects. So here we have machinery worth rupees 80,000 and the adjustment is to calculate 10% depreciation on machinery. So 10% depreciation on 80,000 will be rupees 8,000. Now this depreciation reduces the value of asset by rupees 8,000. So we have to deduct 8,000 from the machinery amount on the asset side of balance sheet. This is the credit effect. Now here, though we have written this depreciation of 8,000 on the asset side of balance sheet, it is a credit effect because we are deducting that amount on the asset side. And the debit effect, we write depreciation on machinery rupees 8,000 on the debit side of profit and loss account. So these are the two effects for depreciation on asset. Outstanding expenses are those expenses of the current year which are incurred, but we have not paid these expenses during the year. So here, for example, outstanding salary rupees 2,500. Now 2,500 salary has not been paid. So we add this amount of 2,500 to the salary already paid. So this is your debit effect, and the credit effect is to write this outstanding salary on the liability side of balance sheet. Since we have not paid this salary, it is a liability. So these are the two effects for outstanding expenses. Prepaid expenses. Expenses paid in advance are prepaid expenses. Since we have paid it in advance, we have to deduct it from that particular expenses. Now here, prepaid insurance rupees 2,000. The insurance of rupees 14,000 which is already paid includes 2,000 which has been paid in advance. So we have to deduct that amount from insurance. So this is the credit effect, and the debit effect will be writing prepaid insurance rupees 2,000 on the asset side of balance sheet. Outstanding income. Income of the current year which is not yet received is outstanding income. For example, outstanding commission income rupees 2,000. We have earned this income, but we have not yet received that amount. Since this is an income, it will be recorded on the credit side of profit and loss account by outstanding commission 2,000 This is the credit effect. And for the debit effect, we have to show this amount on the asset side of balance sheet as outstanding commission income rupees 2000. Income received in advance. For example, rent received in advance rupees 1000. Here we have received a rent of rupees 16,000. This includes an advance rent of rupees 1000. Now this advance rent is not your current year income, so we have to deduct it. So when we deduct this 1000 from the rent amount which is given, this is our debit effect, and the credit effect will be to show this advance rent on the liability side of your balance sheet. I'm sure you have understood the effects for these adjustments. Thank you.